Hello everyone and welcome to Insider Financial Talk Stocks. My name is Alex Carlson. I will be your host today, the editor-in-chief of InsiderFinancial.com, and in this video we will recap today's market action and discuss our game plan for tomorrow. But first up, to get our market moving reports on top small caps, click that link in the description or go to signup.insiderfinancial.com or sign up with your email on any of the pop-ups on InsiderFinancial.com. After you sign up with your email, you can then sign up with your mobile number. Mobile is the fastest way to get our reports, and it works for all numbers worldwide. Simply enter your country code first, followed by your number. For US and Canada, it'd be 1 plus area code and number. Never begin the format with 0. It will not work. And after you sign up, you will get a welcome email, which includes a free copy of the Insider Financial Guide to Penny Stocks ebook. Our ebook, our email service, and our text messaging service are all free service from InsiderFinancial.com. We do not run any paid subscription service, no Discord rooms or Telegram chat groups. Speaking of reports, our Tuesday report was a big winner for subscribers. The stock went from $2.26 to $3.70 in the pre-market. Then during the regular session, the stock opened at $2.50 and ran to $3.05. So there were plenty of opportunities to make money. If you want to trade pre-market, click our referral link in the description and get up to 12 free shares when you open an account and deposit at least $100 with WeWork. Well, guys, it is ugly out there. That's why we didn't have any videos the past few days. I just didn't see anything actionable for you guys, just nothing to talk about. Markets have been selling off all week ahead of the CPI data that came out today, and today we got that data. Markets initially popped, and then traders sold the rally. Last week, all we were talking about is how the shorts are going to feel the pain. Well, this week it's how much pain can the bulls sustain. Stocks today ended a volatile session with slight gains after an initial jump, as I said, following the latest consumer inflation report was tempered by hawkish-leaning comments from a Fed speaker. Equities had slipped this month in the lead up to the report, with Wall Street's benchmark S&P gauge retreating 2.64% so far in August. Treasury yields were higher. The longer and 10-year yield was up 10 basis points to 4.11%, while the more rate-sensitive 2-year yield was up 5 basis points to 4.85%. July CPI came in at plus 0.2% month over month, matching both the consensus figure and the prior month's reading. Moreover, core CPI, which strips away food and energy, also arrived at plus 0.2% month over month, marking its smallest back-to-back monthly increase in 2 years. With the overall picture suggesting that inflation was remaining steady, market participants upped their bets that this would be enough impetus for the Fed to pause interest rate hikes in September, following the central bank's 25 basis point hike in July, which took the Fed funds rate to its highest level in over 2 years. According to the CME FedWatch tool, the odds of the Fed holding steady at its September Monetary Policy Committee meeting have now jumped to 90.5% from 86% the previous day. Meanwhile, San Francisco Fed President Daly, in an interview with Yahoo Finance, acknowledged that recent inflation data has been moving in the right direction, but she said that there was still more work to do and that the central bank had not yet determined its future rate actions. Her remarks, along with weakness in rate-sensitive sectors, led to markets losing their momentum. At one point in the afternoon, all three major averages had erased their gains. Today's market action was fascinating for a number of reasons. Even before inflation numbers came out, futures were up roughly 50 basis points. When inflation came in lower than expected but higher compared to the prior month, stocks took off, led by tech. However, this uptrend quickly turned into a volatile trading day, close to break even, as the market started to realize that the easy part of the hiking cycle was behind us. Now the Fed needs to combat sticky inflation with much tougher comparisons and an uptrend in energy commodities. Even worse, it needs to do it without causing a steep recession, which is increasingly unlikely given expectations of a prolonged period of elevated rates, and that was according to a note from BN Capital. Thursday's economic calendar also showed that the number of Americans Americans filing for jobless claims the past week rose to 248,000, higher than the anticipated 230,000 figure. This was the second straight week of larger than expected claims, boosting hopes that the highly resistant labor market was demonstrating signs of cooling. Technically, the Nasdaq 100 crashed below its 50-day moving average for the first time since March this week, putting it on pace for its worst stretch of losses since December. What's more, the tech-heavy index is on track to cap off a 2-week pullback of 4% as of today's close. If these losses hold, it would mark the worst stretch since December 23, when the index fell 5% over 2 weeks. And then, as we said, it's below its 50-day moving average. Among the so-called big cap techs, Apple, Nvidia, Microsoft, Tesla, they are all also below their 50-day moving averages. Analysts said other discouraging signs lurk under the hood. In a research note with clients in the media on Thursday, top technical analysts at BTIG said the QQQ and several other popular tech-heavy ETFs are nearing a volume pocket that could see them move even lower in a hurry. And if you're asking me why I'm talking about the overall market, which is mainly large and mid caps, when we trade small cap penny stocks, well, it's because it's very hard for small caps to rally if the Dow is dropping hundreds of points. Markets go into a risk-off mood. Traders see blue chips dropping and simply just get scared. They take money off the table quicker. That's why moves are smaller. If you are trading right now, don't expect much in the way of gains. Better to just scalp and run. And what we do here at InsiderFinancial.com is put stocks on your radar that have the potential for outsized moves. As I say repeatedly, there's always opportunities each day in the markets. The problem is identifying which stocks to be in to grab that money. Key is trading green, not red. What we are looking for is momentum plays that have catalysts. It's all about finding the momentum and then ride that wave. Sometimes those waves are big, sometimes they are small. Right now, the waves are very small indeed. And names to put on your radar. First up is PGY. This is an AI play. Had earnings after the bell. We got trendline resistance here running right into just under 280. Stock is trading higher in the after hours. We could see a move above that resistance tomorrow if the market cooperates. So we'll be watching that. But the company said that record network volume of 1.96 billion. Total revenue and other income grew 8% year over year to $195.6 million. Adjusted EBITDA grew by 255% to $17.5 million. Co-founder and CEO said we delivered another strong quarter while advancing our core mission to connect more people to financial opportunity. Network volume reached a record high as we continued to achieve consistent results for our lending partners and investors. We drove sustainable gains in profitability through increased monetization of our network and cost discipline. With continued momentum in our business, we are raising our network volume and adjusted EBITDA outlook for the year. Also, SMLR. We had earnings after the bell. This stock is incredibly cheap, trading at just 11 times current earnings, 10 times next year earnings, no debt, $164 million market cap. This one certainly looks attractive. Reported second quarter and first half financial results. Revenue was $18.6 million, an increase of 25% compared to the corresponding period of 2022. Net income was $5.9 million, an increase of 44% compared to the corresponding period of 2022. Cash equivalents, and short-term investments, $51.8 million. Market cap is just $164 million, so 1/3 of its market cap is in cash. Certainly attractive play there. RGTI, also earnings after the bell. This company also has plenty of cash. We covered this one back in June at $1 before the run. It looks like getting set up to make another move, trading higher in the after hours. Here are the highlights. Total revenues for the 3 months ended June were $3.3 million. As of June 30th, cash equivalents, and available for sale securities total $105.5 million. Based on its current operating plan, Rigetti expects to have cash equivalents, and available for sale securities of between $65 to $75 million at the end of 2023. So again, good management team here. This is a quantum computing play. As I said, you can't have AI without quantum computing. RGTI has been a big winner for us, so put this one on your radar screen. Next up is ACHR. The company put out a press release after the bell. ACHR accelerates path to market, secures $215 million investments from Stellantis, Boeing, United Airlines, ARK Invest, and others. FAA issues ACHR certificate to begin flying Midnight, on track to complete first ever eVTOL aircraft customer delivery. So big news here. Certainly put this one on your radar screen. Can get a move tomorrow, so be watching this one. Lastly is another quantum computing play, IONQ. This was another past big winner for us. We were covering this one back in June when we covered RGTI. We got this big quantum computing run from $9 to $20, since corrected. But got nice news after the bell. Second quarter results of $5.5 million in revenue, above high end of range. Full year revenue outlook increased to $18.9 million to $19.3 million. Second quarter bookings of $28 million brings bookings to $32.2 million for the first half. And then full year bookings outlook increased to $49 million to $56 million. Established the company's first quantum data center in Europe with Quantum Basel, which is expected to be powered by future number AQ35 and number AQ64 systems. So again, can't have AI without quantum computing. These RGTI and IONQ are names to put on your radar screen. Lastly, not worth Wayfair trading higher in the after hours, small lots, so doesn't really don't know what that is about. Had earnings yesterday, market sold off. WeWork, be careful with this name. Extremely volatile. Hit 32 cents, pulled all the way back to 18 cents. Company will be declaring bankruptcy, so be careful with this one. Tilray, talked about this one the other day, from $2.20 to $3. Selling off here with the overall market. Same thing with Tupperware and Yellow declaring bankruptcy. Again, trade these guys, don't own them right now. It's if get in, make that money, and scalp, get with it. A win is a win. So focus on hitting singles and doubles. Don't go looking for that home run. And guys, to get our small cap reports, we cover low floats, short squeezes, recent IPOs, biotech FDA plays, AI stocks, EV stocks, lithium stocks. Click that link in the description or go to signup.insiderfinancial.com or sign up on any of the pop-ups on insiderfinancial.com. No spam. Your info is never shared. Unsubscribe anytime. You can even sign up just to see the level of research we do here at insiderfinancial.com and unsubscribe. Finally, Insider Financial and I are not investment advisors. This video does not provide investment advice. Always do your research, make your own investment decisions, or consult with your nearest financial advisor. This video is not a solicitation or recommendation by seller holds securities. This video is our opinions meant for informational and educational purposes only and does not provide investment advice. Past performance is not indicative of future performance. Thanks for watching. Remember to smash that like button, hit the notification bell to be notified when a new video is uploaded. Good luck tomorrow. Bye-bye.